our inflation numbers, weak retail sales numbers, weak manufacturing numbers, but what is the Fed going to do next week? Well, hi, I'm Mike Wise with your weekly mortgage update. We've seen an increase this week back up to 7%. The retail sales numbers, they came in much lower than expected, and the manufacturing numbers were not great, both these numbers would actually bring interest rates down. But the inflation numbers, well, that's what the market is focusing on. They came in hotter than expected. PPI, or Producer Price Index, it rose 0.6% in February, which was double the market estimates, and year over year it rose from 1% to 1.6%. The CPI, or Consumer Price Index, showed that the overall inflation rose 0.44%, and year over year it increased from 3.1 to 3.2%. But keep in mind, last week the unemployment rate went to 3.9%. Why do I say that? Well, the Fed meets next week, and there's a few things that I want to kind of explain to you. They have, the Fed, a dual mandate. Their dual mandate is price stability, inflation, and maximum employment. When they meet next week, they're going to pause interest rates again. They're not going to move, but it'll be interesting to see what they say about the unemployment rate. So the Fed wants to keep this under 4.2%, and we are already at 3.9%. In addition to that, the Fed wants to focus on the price stability, or inflation. And this inflation is still very, very sticky. They want that core PCE moving to 2%. But getting that last part is very, very difficult. It takes a long time to get there. The other piece that I wanted to talk about is the Fed's dot plot. The dot plot is its forward guidance to kind of prepare the market for the Fed's movement of interest rates. The dot plot, or tool, recognizes just how powerful the Fed communication can be at guiding the economic activity. If they've properly foreshadowed their rate plans, financial markets will have already priced in a move by the time it actually happens, impacting borrowing costs that consumers pay. In other words, rates don't have to wait for the Fed to start moving up or down. So that's what the dot plot is. Below is actually the Fed's current dot plot, which is from December. They release it 4 times a year, and we will see this at this next meeting next week. So with this new dot plot for the Fed, the question is, will we see any changes? Are they still going to lower rates by 75 basis points by the end of this year? Or has sticky inflation changed their mind, keeping rates higher for longer? Having said that, watch for what they say about the unemployment number jumping to 3.9%. That dual mandate, well, it's pretty tough to get to. Switching gears, now is a great time for our List and Lock program. I can help your sellers market a discounted rate up front and give them up to $5,000 towards closing costs on their new purchase. Give me a call and I can give you a little bit more details on it, or you can click on the link below to learn more. This is Mike Wise. I will be around this weekend. If you have any questions, please feel free to give me a call, and have a great week.